Okay. Good evening, class, and welcome to our MI class this evening. We are going to be taking process costing. Process costing is an important topic in MI because it forms one of the fundamental topics that you must learn at this level. Last week, we discussed part one. But before I go on to what we had last week, I want you to go to the chat room to confirm that you can see my screen that I'm sharing and that you can hear me loud and clear. I would like you to do that in the next 30 seconds. So that is an indication that you heard me. If you do that in the next 30 seconds. I'm trying to confirm if I am being heard, if my notes are being seen. So if you can hear me, if you can see my notes for the next 10 seconds or so, can you please indicate in the chat room that you can hear me or loud and clear, I can see my notes so that I can proceed. And I will advise us to rename our device with our names. So not just using Redmi Note 9. Redmi Note 9, you may need to rename so that I will be knowing the students that are in class. So thank you so much. All right, so I think I got a message. Somebody says, can see me, Redmi Note 9. Please rename your device so that I can know. Oh, thank you. Thank you so much. So I can see everybody. All right, in part one, yes, of process costing, in part one, we saw how we deal with normal losses in process costing. And we saw how we deal with abnormal loss and abnormal gain. And I said before that you cannot get abnormal loss and abnormal gain in the same account. It's either you have abnormal loss or you have abnormal gain. But you can have normal loss and abnormal loss. You can also have normal loss and abnormal gain. So we saw how we dealt with situations where we can have both losses, how we deal with normal losses, how we deal with the good outputs, then abnormal loss and abnormal gain. So these are the things we learned in part one. In part two, we are going to be dealing with work in progress. We are going to be dealing with opening stock, opening work in progress, and closing work in progress. So we are going to be seeing that now, and that will be the basis for our discussion today. All right, so let's look at the process costing with closing work in progress. So when we say work in progress, it means that we have some units of goods that are in the process of being completed. So in a manufacturing process which is continuous, there are sometimes unfinished work at the end of a period. Let's take, for example, the period we are considering is April. Let's assume that we are in the last day of the month of April 2021, and that is the end of the period. Maybe we are producing maybe bread, and as at midnight, the work of producing maybe some loaves of bread, some has been produced and some is still in process. Now that is the closing work in process or progress. Now we are going to be looking at process costing now when there is a closing work in progress, but when there is no opening work in progress. Then later, we are going to be looking at work in progress at the beginning and at the end. All right. So whenever some work have been started in the period and have not finished, it means that the costs in the work in progress would have to be shared between finished outputs and unfinished work in progress on a fair basis. Okay. Now, previously, we learned that costs are allocated to outputs by calculating what is called cost per unit. And how did we calculate cost per unit? We divided a total cost figure by the number of units of expected outputs. So we did something like inputs, we remove normal loss, that this is the expected output. So when we have an expected output, we divide the total cost incurred in the input by the expected output to get our cost per unit figure. Okay. In order to do this, we need, when there is a closing work in progress, we need to do something called equivalent units. Now, what is equivalent units? Whenever there is a work in progress, we can never say a work in progress is a full product. Let's say, for example, you are making bread and you can see the shape of the bread, that it is yet to enter the oven. It is still in the baking pan. You cannot call that bread in the baking pan one loaf of bread. No, because it is still work in progress. Then, if maybe it has entered the oven, it has come out, but it has not yet been sliced. If sliced bread is your finished product, you cannot call it one full loaf of bread. And so that is where equivalent units come. It means that one equivalent, how many equivalent unit means equal to one finished unit of output. So what we are saying is, how many unfinished products, unfinished work in progress can we equate to one unit of finished products? That means we have to consider their degree of completion. So whenever we are talking about work in progress, we need to put their degree of completion. Illustration, 200 units, let's say 200 units of bread, and we have in it 50% complete. Okay, 50% complete. So when we say something, 200 units of bread is 50% complete, it feels like 50% of 200 will give you 100 complete units. So it means that 200 units of bread that are 50% complete is equivalent to 100 complete units. So you see here we have equivalent units. How many work in progress with their degree of completion is equal to 1 full unit of complete product. So when we have 400 units that are 20% complete, we simply say 20% of 400 gives you 80. So that 400 units of incomplete product, 20% complete, that means it is 80% incomplete. It feels like 80 complete units. And so you see costs are shared between the finished units and inventory by calculating costs per equivalent unit. So you see, when we are doing our expected costs in part 1, and we want to get the cost per unit for the output, finished goods output, we usually say costs divided by expected units. These are complete units. But now we are going to be sharing these costs when there are incomplete products by saying the costs divided by, we are going to be calculating what is called costs per equivalent unit. So costs divided by equivalent unit. Now let's see how we can do that. All right, let's look at a complication here. Okay, in all the previous examples, a cost per unit was calculated by dividing the total process costs, which includes the adjusting for expected normal loss or cost of disposal, by the expected number of units. So we calculated total cost divided by expected number of complete units. Now, the existence of work in progress will complicate the whole thing, because work in progress might be complete to some certain degree in some inputs and different in some other inputs. Okay, let's say bread, for example, a complete unit of bread, sorry, a work in progress bread that is incomplete in the closing stock might be 80% complete. When we talk about material, it means that material must have been 80% complete in the bread. But when we talk about labor or maybe conversion cost, it might just be 50%. And so this is a complication. It means that unlike full units where everything is complete, both labor and material, here material is different percent complete, labor is different percent complete. So we have a complication. In this case, the number of equivalent units of direct material in a period will be different from the number of equivalent units of labor. So it means that we have to separate the equivalent cost of material from the equivalent cost of labor. So a cost per unit is calculated for each type of cost element using the equivalent cost for that equivalent unit for that cost. So this cost of output is then based on individual costs. Okay, somebody is in the waiting room. Sorry. Okay. All right. Now, we are going to do this in 3 stages. Now, look at the 3 stages we are going to be looking at when we are doing equivalent units in work in progress. First of all, we are going to prepare a statement of equivalent units to calculate the equivalent unit for each type of costs in the output from the process and for the closing work in progress. That it means that we're going to prepare a statement for equivalent units for materials. You prepare a statement for a equivalent unit for labor. Next, the first one is prepare equivalent units. The next one is to prepare statement of costs per equivalent unit for each type of cost. So after you've gotten the equivalent unit for material, you need to get the costs per equivalent unit of material. The third one is you prepare a statement to calculate the cost of finished outputs and closing work in progress from the statement of equivalent units and the statement of cost. So it means that stage 1 and stage 2 will lock up in stage 3, will be completed in stage 3. Now let us see an example of how this is done. Okay, the following information relates to production process X. Now this is the process. Now we have input quantities, we have 4,000 units. This is what goes in. And now we are expected to get out 4,000 units back complete. But what happens? Completed output happens to be 3,500. Then we have 500 units that are in closing work in progress. Now, all the direct materials, that is 100% of the materials, are added to the production at the beginning of the process. So in other words, the materials, direct materials is 100% complete. Closing inventories of 50 units is therefore 100% complete for materials, but it's only 40% complete for conversion. Yes, last week we said conversion applies to every other cost item in production apart from material. So it means all your variable cost, your labor cost, every other thing apart from material is conversion cost. We are trying to convert the material into finished products. So we call it conversion. So the conversion cost, the conversion is only 40% complete. Now, in this period, we incur 24,000 naira for direct materials. And for conversion, we spent 7,400. Required, prepare the statement of equivalent units and the work in progress account. So what are they asking us to do? Prepare a statement of equivalent units, the third stage. They are asking you to do the third stage. But you can't just go to the third stage and do the third stage without doing stage 1 and stage 2. And that is how we will be following it. Stage 1, stage 2, stage 3. Let's go. The first one is, the stage 1 is statement of equivalent units. How many incomplete material will make up one complete material? How many incomplete labor will make us, or conversion will make up 1 unit of labor? So let's look at it now. Output, we have finished outputs. Remember, we have 4,000. It is the 4,000 we want to account for. Finished output happens to be 3,000. And you see, it is complete, 100% complete for direct materials. It is 100% complete for direct materials. So every finished output is 100% complete for material, 100% complete for labor. So it means if it is 100% complete for materials, you see it under materials is still 3,500. Then, sorry, that naira, okay, that naira you see there, that naira you see there is supposed to be units, not naira. 3,500 units for material. Then conversion, not conversion cost. Conversion is supposed to be also 3,500. Means that the finished output is the same. Now going to the work in progress, material is 100% complete. So you see 100% there. 100% times 500 will give you 500 under direct material. But you see, in conversion, it is just 40% complete. So when you do 40% of 500, you are getting 200 as your conversion. So what it now means is that if you add the direct material, the units, you will get 4,000, and you add the conversion, you get 3,700. What it means is that the 3,700, the 4,000 units of the 4,000 units of everything, closing stock, feels like 4,000 units of material and 3,700 units of labor. So you have done the statement of equivalent cost. It means 4,000 closing period, closing stock, feels like 3,700 conversion. What it also means is that out of the 4,000, 3,700 feels like being completed. All right. Now that we've done statement of equivalent units, we'll now go to statement of, what is that again? Statement of cost by equivalent unit. So after getting statement of equivalent unit, we'll now do statement of costs per equivalent unit. So what do? The total cost, material, we spent 24,000 naira in material. What is the equivalent unit for material we spent on? 4,000. It means 24,000 divided by 4,000 will give you 6 naira. So it means that for each of the, maybe let's say loaf of bread, for each loaf of bread that we have, it feels like 6 naira of direct material is involved. Then we go to conversion. The total equivalent cost, the total cost we spent on conversion so far is 7,400. And it feels like 3,700 has been completed. So it's just like 7,400 divided by 3,007 means 2 naira per conversion. So after that is done, you add the 6 naira plus the 2 naira in order to calculate what you want to do. Now, this third thing is statement of evaluation. Now, look at the statement of evaluation. Your finished goods is 3,500, right? That's fine. It contains direct material, 6 naira per unit. It contains conversion, 2 naira per unit. So you add them together, 8 naira per unit. Multiply 8 by 3,500, it means your finished goods feels 28,000. So 28,000 is the cost for the finished goods. Okay? All right. Now, you have work in progress. Material costs. We have 500 units equivalent from what we got there, equivalent 500, and we say material cost 6 naira. So when you multiply 500 times 6 naira, you have 3,000 for material. Now equivalent unit for conversion is 200, and the unit cost is 2 naira. It feels like 400 naira. So you add them up together, you have 3,400. All right. So if you look at um, the, the costs, material cost of 24,000 plus conversion cost of 7,400 is as good as saying 32,400. The same thing here, 28,000 plus 3,400. Okay, that is 31,400. So it seems that everything has been accounted for. So if you look at the process account, look at it here, the process account, you debit the direct material inputs, 4,000, and material cost 24,000 naira. Conversion cost you 7,400. Add them up together, we have 4,000 units, 331,400 in cost. How is it reflected in the credit side? The finished goods takes up 3,500, costing you 28,000 here. Then the closing work in progress, which is remaining 500, is costing us 3,400. How did we do it? This is how we did it in the statement of evaluation. Material 6 naira, 5 times 500, conversion 200 units equivalent multiplied by 2 naira. So that's how we account for this. Now we have looked at opening and closing work in progress. Closing work in progress is what we have just done now. And what we said is that closing work in progress, we first of all get our finished goods, then we now deal with the closing work in progress. For everything, both the finished goods and the closing work in progress are being done using equivalence units. Now let's introduce opening work in progress. Okay, so when we introduce opening work in progress, things start to get a little bit complicated, complex. Okay, so what is the complexity here when we introduce opening work in progress? Now, when there is opening work in progress, there are two types of costs on the debit side of the account. These are the costs that we incurred in the last period, because the closing stock for this period become the opening stock for the next period. And so when it is an opening stock for a period, it means that your cost from last period was brought in forward. Okay, and we are also going to incur costs in the current period. Now, the issue is this: should we treat these two costs together, the cost from last period and the cost of this period? Should we treat them together, or should we treat them separately? Now, this issue, whether we are going to treat them together or separately, is addressed in the two methods we use to address work in progress opening stock. We have what we call the weighted average method, which is also called WAM. Then we have FIFO, first in, first out. Now, in these two methods, FIFO seems to be a little more complicated. So you need to pay attention to grasp what FIFO is talking about. It is easy to grasp the weighted average method, but it's good to know the two of them. Now we are going to look at the weighted average cost method. Look at the underlying principle. When the weighted average cost method is used, the assumption is that all the units produced during the period and all the units of closing work in progress should be valued at the same cost per equivalent unit for material and the same cost per equivalent unit for conversion. I'll take it again. When we are using the weighted average method, that is weighted average, so you're looking for an average, it means that all the units that we produce this period, because we have to divide this production into two, the units we produce, complete units we produce this period, and the closing inventory. That is the closing inventory, which is the work in progress, should all be valued at the same cost per equivalent unit. Now, an average cost per equivalent unit, which is weighted average, is calculated for all units of output and closing inventory. This includes the units that were partly completed at the beginning of the period and which were therefore valued as closing work in progress at the end of the previous period. So it means that a partial work in progress from last period is being brought into this period. All right, the calculation of equivalent units is based on the number of finished units in the period. Now, it does not matter when they were started. So it means that you may have started a product maybe in March last month, and it was not finished. Then you now completed it in April. So all you do is you count the number of units that were produced in April. You don't care whether it was started in March but was not completed. But as long as you have completed in April, then that matters. All right, let's look at 3-stage calculation that we need to follow when we are doing work in progress in weighted average method. All right, the costs are worked out in a similar way that we did when there was no opening stock. We have to get statement of equivalent unit by preparing a statement of equivalent unit for finished output and for closing work in progress, just like we did. Then we also have to get statements of costs per equivalent unit. So that's the same thing we did the last time. We have to calculate the cost per equivalent unit for direct materials and the cost per equivalent unit for conversion costs. Now, the difference between what we did in the closing stock and what we did in the opening stock is that in opening stock, there is what we call the opening work in progress. So we need to include the cost of opening work in progress. It means that the material cost for the opening work in progress should be included in the total direct material cost. And the conversion cost in the opening work in progress should be added to the conversion cost for the period. So when we do that, we are going to get our cost of our equivalent units. So you normally have to calculate a cost, a separate cost per equivalent unit for material and a separate one for labor. This is because the equivalent units of closing inventory will be different for material and for conversion. Then finally, we have to create a statement of evaluation. Now, having calculated the equivalent units and the cost per equivalent unit, we have to prepare a statement of evaluation. All right. Just a moment. All right, so now let's look at this opening work in progress weighted average method that we are given now. We have product X and process X. And we are told that we have opening inventory. Opening inventory. Now our opening inventory has material cost in opening work in progress. Now, opening work in progress means the material, we have 3,000 units that are opening inventory. And the material costs in the opening inventory, we spent 12,600 in the material that are involved in that 3,000 units. And in the conversion cost, which is 30% complete, we've spent 970 naira so far inside the 3,000 units. Now, during the month, so what we just did now was last month's closing inventory, which becomes opening inventory for this month. Now, during the month alone, we put some input quantities different from what we have as opening inventory. We put 7,000 units into the system and completed outputs during the month. So it means that we have opening work in progress, which is like 3,000. We now put additional 7,000 into it. So it means we have 10,000. But you see, completed outputs, we have 8,000. So it's as good as if the 3,000 that was opening has been completed, and out of the 7,000 that was put as input quantities, it feels like 5,000 is completed. So your completed output is 8,000. And we now look at the closing work in progress. You see here it is 100% complete for direct material and 60% complete for conversion cost. Okay, so these are the two things that were happening during this month. So we have opening, we have during the month. So everything here is 2,000 units. So you see 10,000 units have been accounted for. Now we are told that all the direct materials are added to production at the beginning of the process. So whenever we start a process, we have made sure that material cost is added all complete. So it doesn't have, you don't have to start asking for material halfway. Everything has been added at the beginning. The closing inventory of 500 units. So closing inventory of 500 units is therefore, okay, let's look at the closing inventory. How do we have the closing inventory? We have 3,000 units plus 7,000 is 10. Okay. Then output is 8,000 units. Then we have 2,000 units for closing work in progress. Now we are told that the closing inventory of 500 units is therefore 100% complete for material and 60% complete for conversion. Now look at the cost that were incurred in the period. We have material cost is 28,000. Then we have conversion cost 17,430. These are the questions. Say required. You should prepare work in progress account, and that's what we are about to Okay. Now, the first thing we would need to do is to prepare our statement of equivalence unit. You know, our output, what we did output, the completed output is 8,000 units. And our closing work in progress is 2,000. And we are told that the direct material is complete. Okay, for finished goods, for finished outputs, both material and conversion are complete. So when we have 8,000 finished goods, it feels like 8,000 direct material complete and 8,000 conversion cost complete. So that's 100%. Now we have closing work in progress. We will now separate material from conversion. Then we are told that both the closing work in progress, we have 2,000 units, making it 10,000 units. So how do we account for that 2,000 units? So this is where we will now separate the percentage to completion. Materials is 100% complete because it was added fully at the start of the process. So the 2,000 material cost is the 2,000 that is the work in progress, 100% complete. Then conversion, we have 2,000 total units. Look for 60% of it, we will have 1,200. So you add them all together, 8,000 plus 2,000 gives you 10,000. And the other one, 8,000 plus 1, 2, give you 9,200. So that is your equivalent units. We'll now go down to look at statement of equivalent, statement of cost per equivalent unit. Now this time we'll now go to the inputs and go and get the cost. How much cost did we have at the beginning of the period? We had how much was allocated to opening stock, which is 12,600. Where did we get that 12,600? Let's find it. So you see opening inventory, 100%, 12,600, right? Sorry. All right, so statement of cost. In the opening work in progress, we have 12,600. And for direct materials, conversion is 970. It was given to us. Question, the cost in the period, we spent 28,000 for direct material, and we spent 17,430 for direct conversion. So when you add all these, direct material cost is 40,600. That of labor is 18,400. Okay, so now that we've gotten the total cost for each unit, we need to look for the cost per unit, equivalent cost, by dividing the cost by the total output. Total output equivalent units. So we have done equivalent units, 10,000 units for direct material. We've done it in the first part, 9,200 for the second part. So it means that 4 naira and 06 kobo is the cost of equivalent unit for direct material, and 2 naira is the cost of conversion. Now, this is how we evaluate the account. So, state cost of finished goods. So, the finished goods, the output finished goods is 8,000 units. Of course, there is material there and there is labor at different prices. So we have 4 naira and 6 kobo plus 2 naira gives you 6 naira and 6 kobo multiplied by 8,000. It gives you 48,480 as your cost of finished goods. Then we get to cost of work in progress. We're told that 2,000 units will cost you 4 naira and 6 kobo. Then the conversion cost of 1,200 will cost you 2 naira per equivalent cost. When you multiply, you are having 8,120. The other one is 24,000 naira. Okay. So the next one is, how can we marry the two things together? The process cost. Now we have your opening work in progress, which we said is 3,000 units multiplied by the, if you look at the sales value now, the opening value now is 13,570. Now direct material, we said we added some direct materials and we made quantities of 7,000. That 7,000 cost us 28,000 naira in forms of direct material, and by labor and other conversion, it's costing us 17,430. So now that we've done that, we are going to start doing the process costs. We have the finished goods. 8,000 units was produced out of the 10,000 that was input. And we said that the finished goods we have calculated before is 48,480. Then the closing work in progress, we said it was 2,000 units. And it feels like we have calculated it before, 10,052. So the whole account balances. So that's all. We have our 10,000 units accounted for, from input to finished goods to work in progress. And we have the equivalent price per unit, which when done well, will make the two accounts be balanced. Now, the weighted average cost method, here's a summary for it. The weighted average cost method can be summarized as follows. All inputs and closing inventory is valued at the same cost per equivalent unit. So there's no distinction between the opening stock cost and the cost in the unit. All of them are valued at the same cost per unit. Now the cost of opening inventory plus the cost in the period gives you the total cost of the system. Now, cost of closing stock plus number of outputs in the period will give you the total equivalent units. And then we have the cost per equivalent unit, which is the total cost divided by total equivalent units. So that's just that. Okay, so now that we've done the weighted average method, we see that we are using the same costs for the units. We are not separating opening stock, opening work in progress from quantities that are done during the units and during the process or during the month. We're now going to look at first in, first out. In first in, first out method, it is based on the assumption that what came into the period first is what will be completed first. That means that it is work in progress that came in first. And so we have to start doing the work in progress first. And it means that all the work in progress that came in the beginning must have been completed. Then any unit started during the month, some might be completed and some may become work in progress. So let's see how we can, what are some other things we can say about it. So it is necessary to calculate the number of equivalent units of work done in the period. This consists of one, equivalent units of direct material and conversion cost that is required to complete the opening work in progress. So it means that when you have your opening work in progress, we say that maybe labor or conversion is 40% completed. What it means is that we need 60% more to complete it. So we are going to be looking at what is the material and conversion that is required to complete the opening work in progress. That's the first thing. Then the equivalent unit of finished output in the period that we have started in this period and completed in this period. So it means that after completing the partial thing you brought this month from last month, you finished it, you must have done something for this period, started this period, and you finished it this period. Then we will now have equivalent, these have one equivalent unit of each direct material and direct labor. So we started in this period and we ended in this period. So they will all be one equal. Then the total finished output in the period. The total finished output in the period would have been what was started last period, brought into this period and completed, plus what we started this period and complete this period. Now, minus the quantity of opening work in progress and completed. Then we will now calculate the equivalent unit of closing work in progress in the normal way. Maybe we'll do a calculation here to show how this is done. Okay? 3-stage again. What are these stages? We'll first of all find the finished costs. The finished cost of opening work in progress, which is the sum of the cost in the opening work in progress value at the start of the period plus the cost in the current period to complete these units. So it means that we are going to calculate finished cost of opening work in progress. What does it mean? The work in progress is what came in first. And we are saying first in, first out. We must have incurred some period, some costs in that work in progress to bring it to that stage. We are going to bring that cost. Now, because this work in progress will be completed, how much will it take for us to complete it? Knowing that we've captured the cost that we use in starting it up to this particular level that we meet it now, how much is going to be needed to complete it? Okay, so that is what we've talked about. Plus those items we started this month and we finished it this month, we are going to find out the cost involved. Then we are going to start, we're going to calculate the cost of finished output started as well as finished in this period. That's what we said. Now look at the opening work in progress people method example. Okay, so now we have inventory. We have 3,000 units of opening inventory. Now material is 100% complete. What it means is that we don't need any material to complete material in the work in progress. But look at conversion. Conversion cost is only 30% complete. And it cost us 970. We are going to look for the 70% that is needed to complete that opening inventory. Then during the period, which is different from the cost of opening inventory, we have input quantities. We inputted 7,000 units this period. And what came out is 8,000 units completed. So closing work in progress, 2,000. It means that 100% is complete for materials because at the beginning of the process, we add all the materials. But for labor, it is 60% completed. Okay, so all the direct materials are added to the production at the beginning of the process. And it says here, closing inventory of 500 units is therefore 100% complete for material and only 60% complete for conversion. Now this is where the cost 28,000 and 17,430. These are the cost of material and conversion. Now this is the answer here. So the statement of equivalent unit. So look at the equivalent unit. This statement is very important because that sets the tone as to how these people is different from weighted average. Okay, first of all, we have 3,000 units of work in progress. 3,000 units of work in progress. Now, we are going to need materials to complete it. How many percent of materials do we need to complete? 0, because it is already 100% material involved. The conversion cost, how many percentage is needed to complete the conversion of 3,000 units? 70%. Okay, so we've done that. So you see that material is now nil because we mentioned 0%, and conversion cost is now 2,100. So that's the cost for conversion. Then we now go to those ones that are started this month and finished this month. We have 5,000 units. Material and labor is 100% because they were started this month and finished this month. Now we go to finished goods, finished in this, okay, closing work in progress. So we have closing work in progress. We have 2,000 units that are closing work in progress. Mention that material is 100% complete. So it's as good as the 200, the 2000 units of material is still there because 100% completed. Now, the labor and conversion, I'll call it, is 60% incomplete. So there will be a need for us to apportion, multiply it by 2000 to get 1200, which will give you the equivalent cost of that finished item. So what do? You add up all the direct material costs. The direct materials is 7,000. The conversion is 8,300. So it means that 5,000 was started this period and finished this period. Okay, some of them started from last period and finished this period. Then we now have started this period and finishing this period. Then we have work in progress. These ones that we could not finish this period. Now let's look at statement of equivalent units. We have just a moment, please. Okay, so when we look at the statement of costs per equivalent units, total cost in the current period, we have 28,000. How did we get the 28,000? How did we get the 28,000? It was given to us. Total cost incurred in the period, 28 and 17 for that. All right, so that's it here, 28,000, 17 for that. The equivalent units for direct material is 7,000. We did it here, 7,000. Then for conversion, it's 8,300. Okay, so that's it. We have cost per equivalent unit is 4 naira. The other one, conversion is 2 naira, 10 kobo. Now look at the statement of evaluation. We have started in last period, but finished in this period. We have 3,000 units of that nature. Then we have the cost is 13,570. Saw it in our solution here. Then that is for material. Then conversion. Okay, so $13,570 is both material and conversion. This is the cost that was brought forward from last month to this period. 2,100 multiplied by 2.1. Why we're using conversion cost here is because material cost is 100%, so nothing to put in materials again. For conversion cost, we need extra 2,100 equivalent 2,100 to complete that one that was started in the last period and brought to the new period. So it gives us 17,980 for the work in progress. So completed work in progress. Then let's look at what we started this month and we finished this month. We have 5,000 multiplied by the cost of material and that of conversion. So it's going to give me 6,000 and 6.1. That's what you're going to get. Then 6.1 multiplied by 5,000 will give you 30,500. So all these are what is finished goods. So you add them together, your finished goods now, 8,000 units. You divided into 3, into 2, 8,000 units that we have completed. 3,000 we started it last period and we completed it this period. Then the remaining 5,000 here was started this period and ended this period. Then we now look at the work in progress. The work in progress will that be like 2,000 material. So it means that we started this period but could not finish it. And we are using 4 naira as the case may be, we determine it. Then labor cost started it this year or this period, but we could not finish it. And now we are multiplying by 2.1. So cost per equivalent unit is that 10,520. And this is the process account. Now, tutorial notes, if you compare this example using FIFO with the previous example using weighted average costs, you will see that the cost of finished outputs and the value of work in progress is the same in each case. It says that this is a coincidence, but it's not supposed to be the same. Normally, the two methods provide different costs of finished goods and different closing stock. If you see the summary here, it helps you to understand how to deal with FIFO and weighted average costs. So we've seen how to deal with work in progress. Just a moment. So we've seen how to deal with work in progress. We started with work in progress at the end. Finish work in progress, closing work in progress. Then we now complicate things by having both closing work in progress and opening work in progress. So, but now we may also have work in progress and losses. How do we combine them together? It means that we must recognize losses when there are normal loss, and if the scrap will have recovery value, or if the scrap is lost. So these are some of the things we are seeing here now. It says here, closing work in progress and losses. The following information relates to a production process X. We have input quantities, we have 4,000 units. Normal losses, all of them having a scrap value of 1 naira per unit, 10% of input. That's fine. Completed output is 3,000 units. closing work in progress is 500 units. All the direct materials are added to the production at the beginning of the process. Inspection of the units occurs when they are 50% complete. And said, note that this must relate to conversion because 100% of the material is already complete. Closing inventory of 500 units is therefore 100% complete for material, but it's only 60% complete for conversion. Now look at the costs incurred in the period. We have direct materials, 24,000, direct labor, conversion cost, 7,400. That says it's useful to construct an extra working with this question to show the physical number of units. So this is what we're going to do now. Opening work in progress, we don't have. We now put input of 4,000 units. That means total possible units we may have is 4,000. With that said, normal loss is 10% of input. So since we inputted 4,000, 10% of 4,000 will give you 400. So that means what we're expecting is 3,600. But when we now counted actually, we now have 3,000. And there's something wrong. We now look at our closing stock. We have 500 remaining, closing work in progress. So the 100 is an abnormal loss. So that's it. The abnormal loss is 100. How do we solve this? Okay, first of all, we have the statement of equivalence units. Start with the finished output. 3,000 is complete in material and labor. Now we'll now go to closing work in progress. 500 units has been in work in progress, 100% complete in material, so it remains 500 in material. Then we have 60% complete in labor. So in conversion, I keep calling it labor. So you have to multiply 60 by 500, 60% by 500, that will give you conversion cost is about 300. So we were told that they came to inspect it and it was 50% complete. So that is why it is like that. So 60% of 500 is about 300. Okay, now we have abnormal loss. We have 100% material. And yeah, that is the 50% complete when we now came to check whether there are losses. And we now discover that there are 50% conversion costs. 50% will affect conversion. So it means that out of the 100 losses, abnormal loss, we have 50 abnormal loss. Then we'll prepare our statement of equivalence units. Statement of equivalence units, cost per equivalent unit. So we have our total cost 24,000. Our okay, look at the scrap value which we expect to have in the normal loss, 4,400 naira for direct material, conversion cost nothing. Then equivalent units. Okay, the cost per equivalent unit. Now the cost is now 23,600 and 7,400 divided by equivalent units. Equivalent unit here is 3,600 for material and 3,350 for conversion. So it gives you 6 naira 56 kobo material, 2 naira 21 kobo conversion. All right. So statement of evaluation. In this evaluation, we find out that cost of finished goods, 3,000 naira was finished goods. So how do you ascertain the cost of finished goods? You add the material per unit, which is 6 naira 56 kobo, plus conversion of 2 naira 21 kobo. You add them together and multiply by 3,000. That gives you your finished goods cost. Then we do that of work in progress. In work in progress, we have 500 units there. It's complete for material and the price is there. In conversion, the equivalent unit of that 500 is 300 and it costs you 2 naira 21 kobo. Then you are now going to get your cost per conversion, cost per equivalent unit. When you add that of material with that of labor, you have the 3,940 rather. Then when we use that information we got now, we're going to now still calculate cost of abnormal loss. In abnormal loss, the material is not important. The abnormal loss is 100 units material. And the cost of material is 6 naira 6 kobo. Conversion cost, the equivalent unit is 50 units. Because when we did that cutoff, we said 50%, and we brought 50 units for conversion, and we brought material 100 units, 50 units of conversion. Everything here gives us 656 for the cost of material, 110 for the cost of conversion. Add them together, you have 766 as your cost by equivalent unit. Then this is how we put them in the various accounts: direct materials, conversion costs, finished goods, normal loss, abnormal loss. So this is how we deal with process costing. When there are losses, when there are opening work in progress, when there are closing work in progress. So I would like you to go through this material at this time. I'm having an issue here. My laptop will soon go off. So I want to use this moment to talk about your exams. So your exams, which is coming up next week, by this time next week, you should be have done your management information. I want you to ensure that you get a lot of practice plenty questions, and I want you to always answer all the OBJ. So whether you know the answer or not, put something in the OBJ. If you put nothing, you'll get nothing. But if you put something, whether you get it right or wrong, you've tried. And you could get it right. Even if you're not sure, you could get it right. So, but what if you don't put anything? It becomes blank. Then when it gets to the short answer question, put anything that comes to your mind. So they may be able to give you leniency based on the fact that what is in your mind may accurately express that thing you want to say, as that answer you want to give, but it may not be the exact words. So, but they might compensate you. So for this short answer question, which is going to be about 10 questions. And for the OBJ, it might be 10 or 20. I want you to make sure you write all the 20 down, whether you get them or not. Then for the theory part, I want you to tackle the easy ones first. Easy ones first, so that it will give you an edge to also make you save time, also make you be composed, so that you do not start the difficult one first and spend the whole time getting discouraged. No, I want you to do the easy ones first. Then you give room for the bigger ones to come. So thank you so much for coming to class, and we hope that you want to discuss in the general chat room as to the way forward, how we can assist you so that you can pass your exam. Thank you so much. I'll take my bow now and wish you success in your exams. Thank you so much.